Welcome back. So, muted start, that's what the SGX Nifty is pointing towards. Let's quickly take it straight away down to stocks and ITs. One space that we'll definitely watch out for. Rima is joining in. Accenture was the first biggie off the block in terms of earnings and some outlook and guidance. Rima seems to be a bit of a mixed bag.
Yes, so Q2 numbers were actually much better than what the street was anticipating. Revenue growth at 9%. Order inflows, the order wins were exceptionally strong. They've gone up by 17% on a year-on-year basis at record high levels. The problem is the company has tightened its revenue guidance band. So earlier they were guiding for 8 to 11% growth. Now the upper end of the revenue guidance band has been brought down and the full year forecast now stands at 8 to 10%. But what you need to bear in mind that Accenture is a little different from Indian IT. More than 50% of its revenues comes in from the consulting bit, which is seen as pure discretionary. So at a time, at current times of economic uncertainty, the consulting portion of the business gets hit. And even in Accenture's numbers in Q2 or in the order inflows, if you compare the consulting business versus the outsourcing or the managed services business, you would see a big dichotomy. So revenues for consulting have gone up by just 4%, while it's gone up by 16% for outsourcing, which is where Indian IT plays. And even the order booking for the managed services or outsourcing is up 31%. So in a way, I think there are more positives than negatives. And considering that Indian IT has underperformed in the run-up to the Accenture numbers, plus week to date it's down 3%, and Accenture itself was up 7% yesterday, in trade, I would go with a green bias for Indian IT today. Back to you.
All right, a green bias for the Indian IT stocks, but definitely red for some of these asset management companies for the reasons we've been discussing through the morning. Sonal joins in on this debt fund indexation story. Sonal.
Well, yes, it has been discussed completely by you guys already. But yes, let me still take you through the minor details. The news is that mutual fund where they invested more than 35% in equity shares, now that will be deemed to be short-term capital gains. That is what the finance bill is proposing. This applies to investments which are made on or after April 1st, 2023. So what it would mean is that funds like debt funds, gold funds and international funds would be impacted because now all the investments and the redemption will be considered as short-term capital gains. What was the current tax structure? Now the short-term capital gains, they are taxed at the slab rate of any individual, and if redeemed after 36 months, the long-term capital gains was at 20%, and there is an indexation benefit which was available, and that's why there was a favor to these categories as well. Now, as per the proposed amendment, this indexation benefit will go away. They will not be eligible for this 20% rate because it will be as per your slab rate, and grandfathering will not be extended to market-linked debentures as well. We spoke to some experts and they are of the view that while retail investors are not a big category or a big contribution to this category, corporates are, and that is something that could be impacted, and institutional clients, HNIs, they will get impacted if this move actually becomes the final law as well. I got some data in terms of what the AUM for the listed players in terms of debt is. For HDFC AMC, it's 26.6%, UTI AMC at 15%, Nippon Life AMC at 23.4%, and Aditya Birla AMC at 35.5%. So yes, big portfolios which are skewed towards the debt side.
All right, Sonal, thanks very much for that. So many angles to this one, and we'll keep coming back to this. Now, Campus Activewear is the footwear company which has been under immense pressure for a while now, and there is probably more pressure today. There's a block which has been announced. Nimesh, take it away.
Hi, Prashant. In fact, there could be a bit of ease of pressure, so to speak, because it's a clean-out trade from TPG. Now, in Campus Activewear, there's going to be a large block. As I said, TPG is a big seller. So they're selling their entire 7.6% stake via block deal. The floor price is 345, and at that, I mean, the offer size is close to 800 crores. In terms of demand, I believe 60-65% of the book is done, and some large FIs are going to participate. So the execution will be important. But from a supply overhang point of view, it's a clean-out trade. So a large part of the supply seems to be out, will be out after today's block, where TPG is going to sell their entire 7.6% via block deal.
Okay, got that. Thanks very much. We'll watch out for Campus, Nimesh. Back to Sonal. Sonal, why are you watching out for Indigo?
Well, Indigo will be in focus because they held their analyst meet yesterday, and some interesting takeaways where they said that fourth quarter saw a seasonal dip in yields, and this is despite the fact that occupancies were higher for the sector and the company overall this quarter itself. However, they expect this to reverse in first quarter, and they might see strength again in yields in the coming quarter. They are targeting north of mid-teens growth in FY24, so that's a positive number, and they also plan to double their fleet by 2030. Now the growth will come in, they say, not only from the domestic segment, but they are also targeting strong growth in their international segment, which is still not very discovered for them. Management is saying that they do not have any clarity on capacity addition outlook by peers, because that has been a big worry for Indigo, which has the largest market share in the industry. Jeffrey says that while crude has improved their near-term outlook, it's still 40% of the raw material costs, and the other costs are higher, and that's why they have their underperformed rating, also because there are competition concerns for the company. Macquarie says that international expansion will drive the next leg of growth, and momentum will sustain in FY24 as well. And Citi says that current yield trends are fairly healthy if they adjust for seasonality, so they are not very worried and have a buy rating on the stock.
All right, some green expected on Interglobe Aviation. And finally, we have Surabhi joining in with a bunch of stocks that she's been tracking this morning. Surabhi.
Hi, today on my radar is BEL, where the company has received 2 contracts worth 3,700 crores from Ministry of Defence. This is to supply medium power radars and radar warning receivers to the Indian Air Force. Hindustan Aeronautics will continue to be in focus as the offer for sale for retail investors will open today, where they intend to sell 1.75% stake. Now, the non-retail portion of the OFS was subscribed 4.5 times, and the total subscription, including green shoe option, was 2.25 times. The issue price for non-retail investors settled at 2470 rupees per share. And lastly, Vedanta, where they're going to hold a board meeting on 28th of March. This is to consider the 5th interim dividend for the fiscal. Now, Hindustan Zinc has declared a dividend of 26 rupees per share. And if this entire dividend is passed on to Vedanta, the Vedanta shareholders will receive dividend of 19 rupees per share.
All right, we'll watch out for some of these stocks as well. Surabhi, thanks very much. Let's quickly recap the list. Stocks that have positive news flow around them. The Nifty IT Index, of course, all its constituents: Campus Activewear, Interglobe Aviation, Bharat Electronics, Hindustan Aeronautics, and Vedanta. Stocks that have negative news around them today include, of course, the asset managers: HDFC AMC, UTI AMC, Aditya Birla Sun Life AMC, and Nippon Life India AMC. Well, with that, let's move to the commodity cues of the morning as well. We have Manisha Gupta joining in. Manisha, good morning. Happy Friday. What's the latest?
Well, this week has been positive for most of those commodities, especially with what the US dollar index is doing, trading at almost a 2-month lows. So the COMEX gold price is trading at a 1-year lows. Indian gold price is back around all-time highs. And we have seen silver prices trade at a 7-week highs as well. So good going as far as the precious metal prices are there. In the industrial metals as well, we've seen good gains. Copper prices, for one, have gained up by 5.5% in this week on the back of supply concerns coming in from Peru and from Chile as well. And the markets have seen spot premiums increase in China, and that demand really seems quite positive. For the crude oil prices, after 12% of decline in the previous week, this week has gained by nearly 4%. While the Chinese demand is something to watch out for, but here as well, the decline in product inventories in US, the decline in US dollar, and the fact that the US Fed kept pat on 25 basis point of a rate hike, as macros, things have looked quite better for commodities.
All right, Manisha, thank you very much. Good speaking with you, and good to get that perspective. Well, we'll take a very quick break here. Up next, Gurmeet Chadda of Complete Circle Consultants is going to be joining us. He's a top wealth advisor, and we'll ask him about, of course, these changes to debt mutual fund rules. What is he going to tell his investors? And later, we'll also connect with Ashok Sharma, Chief Financial Officer at Greenlam Industries. His Asian Paints, Jalaj Dani, office sells stake in the company. What's happening there? That conversation also lined up.